3 million Britons say it's likely they'll take out a so-called payday loan in the next 6 months, despite the high interest rates they'd face. A survey has also revealed that almost half struggle to make their money last until their next paycheck. Sky's business correspondent Alistair Bunkle reports.
You don't have to look far or hard to find a pawnbroker or payday loan shop in Walthamstow. We counted 7 in under a mile. 2 have opened up just in the last month. This is one of the poorest boroughs in London. In the local credit union, we met up with Natalie. She didn't want to give away her surname, but she was happy to tell us her story. So how much did you borrow?
£500.
Why?
To get paid early, so I could pay off a few things.
Pay off other debts?
Just bills and that.
And how much did you have to repay and how often?
I'm not too sure on the APR, but I had to pay like £38 every time I got paid.
Which was weekly?
Yeah.
And you struggled to do that?
Yeah, and basically sometimes if a payment was missed or the money wasn't there, then I'd get a charge.
Were you foolish in hindsight?
Yeah, definitely.
The friendly packaging perhaps masks some whopping interest rates. We looked online and found plenty of examples covering a wide range. The most staggering, though, a representative annual rate that topped 5,700%. The credit union helped Natalie pay off her loans and now advise her on ways to save and manage her money. They pick up the pieces, if you like, and just listen, therefore, to what they have to say about loan companies.
I detest payday lenders. I think they are preying on the vulnerable, if I'm perfectly honest. They make a big case that they only lend to people who are employed. In our experience, that's not true. I've seen plenty of people who've never had a job who've managed to get payday loans.
When you consider the hoops that some banks make you jump through in order to get a loan or an overdraft nowadays, payday loans are pretty attractive. You have to provide minimal information comparatively. They also charge interest rates that, whilst could be regarded as being extortionate, are often less than a bank might charge if you exceed your agreed overdraft limit.
And they're not afraid to point it out. This video on the Money Shop website highlights how much more you'd be paying if you went into an unarranged overdraft. The banks say they're clear about their policies and fees, but one reason behind the jump in payday loans is a lack of lending.
MPs and others have complained bitterly about the banks withdrawing from the high street so that their constituents don't have access to financial services, and here we are filling the gap in the high street, offering quite a range of financial services, not just loans.
Is it filling a gap or simply taking advantage of an opportunity? Loan companies put the onus on the individual to do his or her due diligence. They know that in most cases they won't. Alistair Bunkle, Sky News, Walthamstow.